You're listening to Energy Insiders, a weekly update on clean energy and climate policy with Renew Economy's editor Giles Parkinson and leading energy analyst David Leach. Energy Insiders is brought to you by Evergen, providing cutting-edge energy management software for battery optimisation, virtual power plants and distributed energy resources. And Pylon, helping solar installers and retailers design high-resolution solar proposals in minutes.
Hello and welcome to this latest episode of the Energy Insiders podcast. My name is Giles Parkinson. I'm the editor-in-chief of Renew Economy and editor of its EV-focused sister site, The Driven. And joining me, as usual, is ITK Principal David Leach. David, I trust you were well and survived the heat wave in Sydney, although it might have been a marginally better place to be than the storms that ripped through the southern states.
It's Grandparents' Day in Sydney at our school yesterday, or the school some of my grandkids go to, and every time I go there I think of Chris Bowen's Future Generations phrase and, the world that we're trying to leave them. Look, we've got a great guest today who's helping to enable that from one of the world's larger countries outside China in the space.
That's a nice way to describe the United States, one of the world's largest country. Look, we do indeed, and we'll be back with the news of the week, such as Liz, after this interview. But we did manage to catch up with Pablo Koziner. He's the Chief Commercial Officer for GE Vernova. I think still the world's largest supplier of energy equipment, makers of turbines, wind turbines, gas turbines, other turbines. And very much at the heart of what's happening in the US at the moment, although not necessarily all cheerful about it. Anyway, we caught up with Pablo a while ago. Here's what he had to say. Pablo Koziner, thank you very much for joining the Energy Insiders podcast.
Hey, great to be with you. Thanks for the opportunity to be with you today.
You're the Chief Commercial Officer for GE Vernova, and in that role, I understand you have many responsibilities, three of them being supply chains, strategy, and R&D, which sounds like a lot to get through. But first, I just thought, and we will, hopefully, I just thought we'd just start off with some of the technologies which are a bit closer to what we're seeing. Well, actually, no, first of all, I wanted to ask you, what brings you to Australia? And what have you learned?
First and foremost, a keen interest on all things Australia, both personally and professionally. But when I think about Australia from the energy side, it's hard to think of a country, and certainly in significance and scale, as what we see in Australia, that is leading the energy transition in the way that we're experiencing here. So there's just so much to see and learn in terms of how our technologies come together to lead to greater decarbonization of the energy system.
Yeah, and I'm just wondering if you have a responsibility around the world. I mean, how does Australia kind of rate in this sort of the process or the rate of change in that energy transition? Australia, I think we understand now, has some quite unique advantages in terms of the sheer scale and the resource of its wind and solar, and its sort of development of battery storage and thinking about the grid differently. Is this much different from what you're seeing elsewhere in the world?
Well, I see a lot of the same trends in many parts of the world, but in terms of economies at scale that have had days where they're at 78.6% renewable energy use, as Minister Bowen expressed the other day at a conference, and 50% of the energy mix now being, or at least close to 50% of the energy mix at renewable. That's impressive, and I would say that while many countries aspire to that, and I'm thinking about countries with the type of economies, landmass, and population as Australia, not many are at this stage yet.
Okay. So how is GE thinking about this then? You are sort of a global monolith in the energy world. You are based, of course, in the US. The US is just going through all sorts of political transitions and things. And I guess the energy landscape has changed there quite fundamentally over the last 6 to 8 months. Your quarterly results came out overnight. One of the things was the performance of your wind division. I think you reduced the losses, but there was a very clouded outlook for that division, just to sort of focus on one part of your huge portfolio of technologies and systems. Just give us a bit of a flavour about how you're thinking about the US, how that's impacted. We've heard a lot of stuff about offshore wind and some of the decisions taken there. What is the outlook there for wind in the US, and why, and what might its future be?
Well, so I think the world is in great transition, first and foremost. I mean, I'm definitely happy to speak about the US. But in all elements of energy mix, policy, global trade, we're experiencing an environment of high pace and high change. And certainly that's the case for the US, where, we're actually very proud of the work of our wind division. While things are trending to lower volumes, as we've expressed in our forecast for a multitude of reasons, we think our wind business continues to be healthier and better with the products we're producing, especially with onshore wind, where we have focused on 3 product classes and we're making um, significant gains in the product quality, its availability, high focus on how we leverage technologies such as artificial intelligence and robotics to improve life cycle cost. We're really taking this opportunity to look at the wind business and the wind industry and think about how we introduce products that just drive more and more value, especially in an environment where subsidies are being reduced. It only puts more pressure and ambition in our quest to deliver products that have a high degree of value for customers, and I'm very excited about that.
So, Pablo, I think GE Vernova is about 150 US billion of market cap with net cash and no net debt. Is that roughly right?
Yeah, I don't know what it was today, but that's a ballpark number that is right.
And there's about 30 million of revenue, I think, 30 billion, excuse me, and about a 10% EBITDA margin, broadly speaking. So that's about 3 billion of EBITDA. It's a pretty small number relative to the market cap, if I was to think about it that way. Why do you think investors generally seem so excited?
Yeah, and just some corrections there on the
Sure.
revenue. So we expect our yearly revenue. I just have since we announced results today, but we expect to be in the 36 to 37 billion for revenue, high single digits for EBITDA. But your numbers directionally correct. In terms of market cap, we know that market cap is an expression of investor confidence, right? You get to earn a multiple depending on how much your company excites them in terms of are you in the right industry? Are you a company that is going to lead in a context of significant growth? Do we have the right products to support the needs of our customers? And I think what you're seeing here is that there's a very high vote of confidence by the investor base in our company, and we work very hard to earn that every single day. It's a high bar, and we like that. But we feel very confident that we're in a great industry, and we are in a privileged position to lead that industry because of the strong portfolio we have and the way that we're investing our capital to continue to grow that.
I want to come back to the CapEx in a little bit and the investment. But I mean, for those that haven't had a chance to look, basically your division has a power division. Your company has a power division, which is more or less gas. I mean, nuclear's in there, but it's gas. And I want to talk about gas. Then there's the wind segment, and then there's what you call the electrification segment, which itself divides in two, one between stuff related to transmission, more or less, and transformers and things, and the other related to software, which I wanted to talk a bit broadly speak. And the other thing I think I wanted to mention, and you can please correct me if I've got it wrong, is that a lot of your revenue growth and margin improvement, if you like, is related to the services segment within that overall business, and particularly services to the power or essentially gas maintenance. Have I got that quickly roughly right?
You do, and when you say the power division is largely gas, you're thinking it's the profitability or maybe the revenue. I mean, we actually think about it as it is gas, but we are very committed to our nuclear division and very excited about our SMR business. We have a steam business, a hydro business, but it's certainly, if you look at where a lot of the activity today is, it's in the gas turbine business. But the way you describe the portfolio, that's accurate. It's four divisions: power, the wind business, which is offshore, onshore, the electrification business, and the electrification software business.
Great. And so if I just talk about gas a little bit, one of the things is that, I mean, costs and prices of all capital equipment in this industry are kind of going up. I just wondered, could you talk a little bit what you're seeing for gas turbines, both open and combined cycle, and what you would tell a customer about lead times now, assuming they didn't want to pay a big premium to get jumped up the queue?
First of all, lead times are extending. What I would tell a customer today, presuming that it's a customer that's interested in acquiring gas turbines, is to be very specific about their project opportunities, timing, status of permitting, whether they have secured offtake or not, because we're very interested in making sure the gas turbines are going to projects at the time and place that they're required. We try and partner as much as possible with our customers to ensure that delivery is timely so that they can execute their projects within a context of very, very high demand. And you mentioned pricing. Pricing is an element of this. I would even go as far as saying surge in demand of industrial gas turbines and other generation equipment that's gas-based, because the needs that we're seeing, whether they be driven by artificial intelligence data centers or firming power for grids, just like what we're seeing here in Australia. I mean, there's a trend globally that we're experiencing that is the need for more power and more electrification, that with the advent of more renewables and energy systems and more capacity needed, the demand for firm power has increased, and that firm power is being asked for in a short period of time.
Yes, that's right, a short period of time. But I mean, the suggestion is that if you put a turbine order in now in a normal way, you'd be looking at, you wouldn't get it before 2030?
No, that's it depends on the turbine class. And I hesitate to just put hard dates out there, because that's actually not the way we work with customers. I wouldn't say that that if you need something before 2030, that's not achievable. What I would say is the demand continues to increase. Lead times are extended. We are also seeing a lot of movement in terms of the timing that projects require this equipment. Where we can, we try and work with customers to improve time. We certainly are willing to work with customers at times where they need a bit more time for their projects. But certainly in a context of, we announced today, for example, that we have 62 gigawatts of contracted power, generation, heavy duty gas turbines. So, 62 gigawatts that we have under our contract. We are ramping to a capacity by the third quarter of 2026. And what we will do in a full year of 2027 is 20 gigawatts per year. So that gives you a sense of where we stand in terms of demand in our capacity. Now,
and Pablo, so just on that, you're ramping up to 20. That's the exact question I was going to ask. And what would it have been in 2024? What could you have done?
I believe 2024 was 55 gigawatts.
No, but I mean, in terms of new build per year, how much will you deliver this year, for instance?
Yeah, so what we're moving to is 70 to 80 heavy duty gas turbines per year in 2027. So those are the numbers that we've been sharing.
But I think that would be up about a quarter or something, from what you could have done a year ago or something like that. I mean, what I'm trying to get it to is this capacity expansion going on in response to the demand and the 50% and more price increase. I'm not trying to tie you down. I'm just trying to provide a sense of demand and response.
Yeah, but I think it's certainly clear. Demand is up. Our response is increasing. These are complicated systems that have to be built that depend on a pretty extensive supply chain. And we're doing a lot here to maximize what we can put through our factories. And I've given you the numbers that we expect to be able to produce in 2027 and beyond. Now, there's an important clarification. When we talk about the 62 gigawatts that's contracted, that doesn't all fit neatly into 26, 27, and 28, right? Some of the stuff that is being contracted goes on beyond that. So as people work back on numbers and try and say, well, you're sold out by a certain period of time, it doesn't always work that way.
No, I hear that, and I certainly don't know enough about GE Vernova. Even I wouldn't, even if I'd studied it for years, to really get it. So these are more general questions.
Well, that's why I'm here to help.
Thank you. And I look at transformers because we've seen massive increases in the cost in Australian dollars of transmission bills, part of which relates to local factors and part of which I think relates to global factors. And I was wondering, if I think at the EIA or PPI, transformers are up about 80%, I think, in that over the last 3 years in terms of cost. 80% is a big number. There must be a lot of demand for transformers and transmission-related equipment, voltage regulators and stuff. Are you got any plans to expand capacity in that area?
Well, we just announced the acquisition of the remaining 50% of a joint venture that we were in with a company named Prolec that provides a wide range of transformers, a lot of that for North America. But we are absolutely looking to, one is to take more control over our supply chain because we see continued demand for transformers. And by the way, transformers have been in high demand for longer periods of time than what we're seeing in this ramp of gas turbine demand. And that's because investments in grid and electrification are leading a lot of the energy investments. I mean, there's just...
And taking forever. Sorry, I didn't mean to interrupt.
No, that's... well, it's interesting because in energy, when you say forever, certainly people, when you make a decision, you want the equipment as quick as possible. But when we look at energy and project development, you're talking about projects that, when you build a gas power plant can take anywhere from, it just depends on the product, right? But in the most aggressive sense, you could be at 10-month with our fastest deployed aeroderivative engine to 3, maybe 4 years, depending on site permitting that needs to take place to get a gas plant built. And so when you look at lead times for equipment, these are relative discussions. So when sometimes you look at a transformer and it could be multi-years for delivery time, it just depends really on the size and the type that you need. We think that for a lot of the projects that are being developed that we can source to help customers meet their deadlines, all things considered, with all the development work and engineering and construction that needs to take place.
Good. I'll hand back to Giles in a moment. The other thing I saw when I was glancing through your segments is your new, is it Grid On? I may have the title wrong, software, which is seems to be some kind of integrated grid software that you've decided to develop. And aiming, I think, for $1 billion in revenue. Again, I may have that number wrong. Could you just talk a little bit about that software? I mean, we've seen in Australia a lot of software offerings and developments, and in Australia, at least, we have a very disintegrated energy sector between transmission and distribution and generation and retail. And one of the things I notice about that is that there's a lot of software overlap. Just to, for instance, a distribution company has to maintain its own point of presence software, whereas the retailer will cover the same household, but just from a retail perspective. What does GE Vernova's software attempt to do, and how's it going?
So the Grid OS is really a grid management software that helps operators react to things that are happening in the grid at any given time through equipment management, analysis. We have capabilities in things like vegetation management. right, that takes into account satellite imagery that shows areas that are more vulnerable to disruption in storms, as an example, because of vegetation that has grown. And so it alerts the operators of the grid that they may be at risk in the event of certain conditions occurring to lose transmission, and that they can get ahead of that through the analysis of this software and capability. And we're looking at other systems that we can deploy that allow operators to go from reactive to proactive in the way that they manage their grid systems. And as technologies become more integrated and more balancing is required and decisions have to be made quicker, this is the type of software that can help them. And it really is focused on driving more efficiency, lower costs, lower risk in the operation of the grids.
Pablo, you've got a very large R&D budget. I'm just wondering if you could maybe share with us what that budget is and which particular technologies are getting you particularly excited at the moment.
Oh no, thank you. I mean, we're spending a lot of time in different areas, and ultimately, the way we look at the energy system, it's about three things: capacity, value, and decarbonization. And as we think about where we need to develop improvements and new products and new ideas, it has to fit in one of those areas. So what are we doing to maximize our ability to drive capacity? How do we improve power density, reliability and quality, value to customers by driving more efficiency, and decarbonization through solutions like direct air capture and carbon capture and hydrogen fuel uses for our gas turbines. But we're also spending a lot of money in robotics and artificial intelligence, both in how that can be applied to support customers and how we use it internally to improve engineering and quality and operational efficiency within the company.
I'm just wondering, you've also you're one of the companies looking at SMRs, small modular reactors. You mentioned them at the start of the conversation. I'm just wondering, where are you up to there? I mean, how soon might they be rolled out in the US or elsewhere? And what are they going to cost?
So we're actually building one in Canada with Ontario Power Generation, and that's our first 300 megawatt SMR, and it's one of the first of four for that particular site, and we're seeing a huge amount of interest both within the U.S. and outside the U.S. for this technology. It's something that we think can become very valuable in the energy mix. I mean, 300 megawatts of fully decarbonized power is of great interest, especially to hyperscalers that are looking for very large amounts of power to scale their data centers and artificial intelligence. There's a lot of work to be done in terms of scaling this technology in a way that we're envisioning and we're aspiring to. We like the fact that this could potentially offer repeatability in its build, and ultimately we can scale the business. But we have the first one that we expect to commission by 2029, so that'll be the first that I'm aware of SMRs that are being built, and we're very excited about that. And we have more underway.
Just one final question, because I know you've got some other commitments. Just on the data center and the AI issue, that sounds like a lot of power demand being created very, very quickly. Which technologies do you think are going to be best placed to respond to that demand over the next 5 to 10 years?
Well, if it's the next 5 to 10 years, from a power technology standpoint, it'll be a combination of gas generation, gas turbines, and batteries. And the batteries are an important part of the mix because of the way that, and I'm specifically to AI related loads. So the way data is being used in these AI factories that are being conceived is that the movement of power that's required in order to respond to what these data centers are calling for will require some level of shock absorbing because of the speed with which we're anticipating energy to be called on. So it's a really good mix in terms of gas generation, gas turbines that can cycle quickly in combination with batteries to be highly responsive and provide the reliability that customers require.
And that shock works both ways, doesn't it? Because, training loads can drop instantly from, 300 megawatts to zero if for some reason or another. So batteries that can work both ways in milliseconds seem to have quite the advantage there.
You're absolutely right. And, and it remains to be seen also how the hyperscalers, the owners of these data centers and the users of the technology, how they're going to adapt their own loads, right? Is it in the way that they manage their training cycles? There are opportunities to drive greater efficiency by all of us coming together and figuring out how the best way to manage this is. But you're absolutely right. I mean, these could potentially be large swings, and you have to have technology that can respond to that.
Pablo, it feels like we're just starting on a good conversation here, but I think we've got to wind it up because of your other commitments. And look, we do thank you very much for spending the time with Energy Insiders during your visit here, and good luck for the rest of your visit.
Oh, thank you so much. I've enjoyed our discussion.
That was Pablo Koziner from GE Vernova, and we'll be back after this short message.
It's no secret the energy and renewable infrastructure sector can do better. That's why at Rayo we're leaving a legacy of accessible, affordable and sustainable energy solutions that benefit everyone. Rayo's highly experienced team work to empower their clients through choice and certainty, delivering world-leading, successful energy infrastructure projects. From project development, engineering, construction, commissioning and maintenance, choose the next generation of infrastructure delivery with Rayo. Let's shape a better tomorrow together. Visit rayo.au. Australia's largest clean energy event is back. Join us at All Energy Australia on October 29 and 30 at Melbourne's Convention and Exhibition Centre. With over 450 suppliers, 500 world-class speakers and 12 stages, you'll gain the insights, solutions and connections to power the nation's clean energy future. Best of all, it's completely free to attend. Register now at all-energy.com.au.
You're listening to the Energy Insiders podcast with Giles Parkinson and David Leach. David, I'm not too sure what we have learnt from Pablo Koziner. GE find themselves in a very interesting position. The energy market in the US obviously is very different from the Australian experience and getting more differenter, if that's an expression.
Well, I don't know that it is. I mean, it goes through phases, which is just like our market and most other country markets do as well. What I would say, speaking as a financial analyst, I find it very interesting. You can't have EBITDA of even 4 billion and 150 market cap. One of those numbers is wrong. You're not going to be on an EBITDA multiple of like 40 times indefinitely. So they, and the other thing is that I think it provides a huge temptation to make acquisitions when the market values you so highly. You need to take advantage of the market's goodwill, or that's the general strategy. But that's not really the point of this thing. Really, the question is how much they're investing in new capacity, both for transmission manufacturing. Like we really do need to see more transformer capacity and bring the lead times down. And for those that are interested in gas, that's also important. But, despite all the optimism about gas in the United States, I don't think it's widely shared in a lot of other places around the world. We didn't even get around to talking about gas's role in carbon emissions. One of the most interesting comments I saw this week was from Matt Keane, who was pointing out the diesel fuel subsidy is quite kind of silly. We do need to have a consistent set of policies. We've talked a lot in policies about sticks, but the more and more I think about it, we need to incentivise consumer demand, particularly in areas like EVs and stuff. But anyway, what do you think, Charles?
No, look, that's right. And that diesel fuel subsidy, look, it just seems like a complete anachronism. I mean, there are people who still argue that it's not a subsidy, but it clearly is. Andrew Forrest for one, who uses almost a 900 million, almost 1 billion litres of diesel a year for his Fortescue iron ore mines, and has vowed to stop doing that by the end of the decade, and suggests it would help a lot if that subsidy was removed. Although it was interesting that I think this week Dino Otranto, who was on our webcast just a week ago, was talking to analysts and saying that electric trucks are now on a price parity with the diesel trucks, which is interesting. And I guess another interesting thing that emerged this week was a new 2 gigawatt wind project from Fortescue. This one's much closer to their iron ore mines. It's different from the East Goldfields project, which I think we talked about with Dino Otranto last week on this podcast. And this one is actually right next to Roy Hill's pastoral station, which of course is owned by Gina Reinhardt.
It doesn't have planning approval yet, I don't think, does it?
It doesn't have planning approval yet, and it has a little bit of a transmission line that goes through part of the Royal Hill pastoral lease. So that'll be some interesting conversations being held with Gina Reinhardt between the representatives of Australia's most gung-ho green energy supporter with possibly its most recalcitrant, or its
Meanwhile, back in the NEM, we're up to, I think, 90,000 home batteries is the number I saw recently that gets trumpeted. The trouble is we don't have any visibility on the effect that they're having on the grid. It's very hard, in fact impossible, for AEMO to actually measure when those batteries are charging or discharging directly. But when we look at the utility batteries, what we can see that now every day, at least at this time of the year, there's about 1 gigawatt of utility batteries operating for an hour at least in the evening, and then scaling down, and pretty much that much utility battery charging over a slightly longer period. It hasn't had much impact on prices because at this time of the year, we have so much coal capacity out, like in Victoria, 42% of capacity, 2 gigawatts is out, and around the NEM, 5 gigawatts of capacity isn't there. So, another 1 gigawatt of batteries doesn't compensate for 5 gigawatts less coal.
And particularly when they're owned by the very same people who own the coal and the gas-fired power stations. Interesting to note in WA, battery storage is now accounting for 20% and more of the evening peaks. And they've just allocated more sort of capacity credits, which they have over there, to some more big batteries and hybrids. So like a quarter of their capacity now comes, or those capacity credits now come from battery storage, and that will change quickly as we move forward over the next 5 years. So it's interesting, the changing face of that grid there, which is probably the world's biggest isolated grid. Just interesting what you mentioned about the household batteries, and we don't have any visibility on that. There was an interesting comment in this Clean Energy Regulator with a report this week. It talks about 100 different battery storage products are out there at the moment. They all seem to comply, but the CER is a bit concerned about whether they've all been installed properly. And there's also questions about how many of these are really sort of going to be VPP compliant or suitable. And it's interesting, just some of the calls for the energy retailers to require, to make them make VPPs a bit more interesting for the consumer, because the consumers has a fair bit of skepticism out there.
Yeah, Dan Westerman said that at the...
That's who it was.
Are we allowed to mention the AFR Energy Conference, which is the conference...
Well, you just have, so...
which is a conference for the big end of the town, where all the people come in and the big company bosses and talk.
Very nice suits, I understand.
Yes, good suits, but the trouble is they're talking to an audience who doesn't have a clue, let's face it, about what's actually going on, and so they can say whatever they like. So we saw Mike Henry talking about electricity prices in Australia being 50 to 100% higher than overseas, which at least at the wholesale level, currency adjusted, I just don't think is even factually correct. We heard from Frank Calabria at Origin about the need for policy certainty and the difficulties building anything, which he must obviously have encountered because he hasn't built anything. And just in general, not a real sense that we were going to get much action out of those guys for the time being, and it's going to be left to the rest of us to get on with it. The trouble is, where I do agree with whoever was writing about it at the AFR, is that wind is hard. Solar is not very hard to get a return on. Wind's just hard to get built. You'll get the return. So the only sector is batteries, where we are seeing this continued surge. And, we're going to have an absolutely huge number of batteries if all of those ones in the CIS get built. But that brings me back to my idea that we really want more demand pull rather than supply push in terms of the policy. You need both sides of it to really be happy.
We need people like Origin Energy to actually sort of commission or contract a few wind and solar farms before they close a Raring.
They could certainly sign some PPAs if they wanted to, as well as trying to build Yanco Delta, which for those that don't know is a 1 gigawatt plus wind site in southern New South Wales. But it can't actually, it has to go back into planning. I mean, Origin paid up to $300 million for that. I don't know if they knew it had to go back into planning, but it does. And then it also needs, as we've discussed before, an upgrade to the Dinnerwin, which is the main substation at the end of Project Energy Connect. And that has to be upgraded further to allow that wind farm to be built. So, we're still dependent on getting this transmission done. And substations upgraded. In Queensland, we need a big upgrade to a power station for one of the big to a substation for one of the big solar farms there. Still plenty.
Bulli Creek, yep.
Plenty going on there. I suppose the good news is that if you look at HumeLink, it is actually construction started. It's actually happening, despite all the people who said it had to go underground, would never be built. We'd see nice farmers stripping off all their clothes and tying themselves to bulldozers. In fact, it's actually just getting built.
Well, there you go. Chris Bowen was also speaking at that conference and quite insistent that we will get to 80% renewables. I think we'll get very close and maybe have things under construction. Not too sure they're all going to be commissioned by then, but that would still be good enough in my view and interesting enough. And of course, we did interview Chris Bowen on this podcast a few weeks ago. We, as well as Dino Otranto from Fortescue and also Paul Simshauser from Powerlink, who's now turned up as CEO of Iberdrola. So Australia, which is interesting. Perhaps they can get on and build a few more things now.
Yes, I expressed on LinkedIn a kind of reservation that the current CEO is moving to the chair role. That's I have never supported that. It's just not the way I believe good corporate governance should run. But it's not a public company, and it's none of my business. But that doesn't stop me having an opinion about it.
Well, it is a public company because it's listed over in Spain, but not a public company in Australia. Then, so yes, it's a subsidiary. He's chair of a subsidiary.
You're chair of the Australian subsidiary, which is a different deal.
It is indeed. Look, I think that's probably about it for this week, David. I can't think of anything else. There was probably some very important things that we failed to mention. I do want to mention the Switched On podcast, which had an interview with Alison Rees from the Grattan Institute with this interesting idea about adapting the coalition's sort of carbon price and safeguard mechanism for the electricity grid. I think that's actually really, really interesting.
No, I think that's very interesting. And we also need to mention the article on your website that dealt with the Rainforest Alliance and the absolute bullshit that they are spreading about how impactful wind and solar farms are. And this is part of the trouble with taking the opposition seriously. There are plenty of things, as everyone would say, that are up for debate in this energy transmission. But when you start with a view that we should be building small nuclear reactors, that you can't have any agriculture around wind and solar farms, et cetera, you just start with utter bullshit. It's nearly impossible to get the conversation back to the level that it needs to be. So, just to express a political opinion here for those that are still listening, a diminishing number every second, I expect. I think it'd be a lot better if we, the National Party would have split away from the Liberals, myself, in the longer term. It's the future for having a decent opposition party, and start with the dissolution of the Queensland LNP, and then moving some of the rest of the Nationals could go off to One Nation or wherever they feel happy. And the remaining Liberals could start to talk more to the Teals, and we could have a party with an alternative views that would still be a centrist party, and I think it would make a lot of people happy. But we're not doing this as politics, are we?
No, but I'm kind of fascinated. I mean, we see sort of Barnaby Joyce obviously sort of making noises and possibly going to One Nation. I just wonder how many moderate Liberals there are left. It might be a smaller party than the Greens.
No, there's heaps of people that are interested in good ideas, and any party that comes up with a whole bunch of good ideas, as opposed to stirring up echo chambers and playing to people's worst fears, is going to do better in the long run. You can certainly get a long way drumming the fear beat, drumming the echo chamber. But you can't ultimately win in a human society based on rational expectations and good outcomes for the average person.
Excellent. I'd just like to make up. Well, one thing I did want to mention was South Australia. It started its sort of tender for long duration storage and a couple of gas turbines as well. Which is an interesting one because they're sort of heading towards 100% net renewables by 2027. And I just don't think that that's quite well understood exactly how much of a development and achievement that is. So they've got a lot of batteries there. They don't have any pumped hydro.
But Charles, what do you actually mean by that? Because they'll still be transmission linked, won't they, to Victoria and to New South Wales?
Yeah, that's why it's 100% net renewable. So they'll be exporting some when they need to, and they'll be importing some when they need to. It's still...
But it doesn't actually demonstrate that you're running the system on 100% renewables, does it? I'm just trying to draw this distinction. What you say is absolutely correct. But in terms of what some people are interested in, is it actually physically possible to run a renewable-driven grid? It doesn't actually answer that question precisely.
Well, no, except it might when the grid is isolated and the transmission links are down, which it was last year, and they got to 92% renewables. They have, what's interesting about their protocols now is that they've actually just published this week a study, I haven't had a chance to write about it, how in 2027, with the connection of this new transmission link, the Project Energy Connect, there'll be the first grid in the world which will be able to run without any synchronous generation because they've got synchronous condensers, which kind of sort of mimic that, and plus a whole bunch of grid-forming batteries. So they're pushing the limits of the understanding at all times. And I think that's one of the reasons why we should be really interested in what's happening over in WA, because it doesn't have any links, and whatever percentage of renewables it has will be all by itself without any exports or imports. And it's really interesting to see, one, the levels of renewables that they're actually getting to the grid, and they've been pretty consistently reaching peaks of 85% over the last 2 weeks, which is to be expected in spring before the summer temperatures come in. And they are adding batteries at an extraordinary rate. If you can think of the size of their grid and the amount of batteries and the size of those batteries that are coming in, it's quite remarkable. And they are getting rid of their last coal-fired power stations by 2029. That's just 4 years away. So it'll be interesting to see if they can actually build a bit more wind and solar bulk capacity to go with the batteries. Otherwise, the batteries will just be storing gas.
So that's a great place to end this on, and very interesting discussion to talk about. Maybe we'll take it up again, but it's goodbye from you and goodbye from me, and thanks to our sponsors. You say that, don't you?
I usually do, yes. I'd like to thank our sponsors, Pablo and Evergen. I'd like to thank you, David. I'd like to thank Pablo Koziner from GE Vernova for joining us, and for all the listeners. And we'll be back with another episode of Energy Insiders next week. Bye for now.
Energy Insiders was brought to you by Evergen, the market-leading renewable energy software business that optimises residential and commercial solar and battery systems. Evergen enables large numbers of systems to operate as a single fleet, so network operators can use them as a virtual power plant, generating significant value for consumers, network operators, and the energy system as a whole. Evergen software is powering the energy system of the future. Energy Insiders was also brought to you by Pylon. Pylon provides easy-to-use solar design software for installers and retailers with pay-as-you-go pricing, no monthly cost and no lock-in contracts. Join Australia's top solar companies who trust Pylon to design high-resolution, CEC-ready solar proposals.